decision, raised the interest rate by a quarter basis point. The market didn't like it, but interesting, it says no sound. Oh boy. All right. So I'm assuming we're fixing that. All right. Sorry about that. Let me know. Hey, now you can hear me. Excellent. Thank you. I appreciate that. The Fed set up its interest rate hike for quarter basis points. I think it was built in, but the market didn't like it. The market responded in kind and went down. The market's doing a little bit more continuation of going down as well. So where are we headed? Well, I did a video. Hopefully you saw it. I did a video in regards to preparing for a market correction. I think that we're in a situation where the reality of the raising of the interest rates is not good for the economy, that inflation, although getting better, is still high. The job market is still strong to the point that people are still spending money. Those are the things that the Fed doesn't want to see, but the Fed doesn't want to cause a recession. And if they do, they want to cause a mild recession. It's a big circle just going around and around and around of what's going on in the market. And as an investor in the market, I need you to understand this, that this is a trader's market, that this is not a trending market. So I did a live today on the mobile app, and in looking at what was going on in the performance of a lot of the different searches in the mobile app, it's a short-term market that no matter how good a search was, that over the last 3 months, 6 months to a year, they weren't doing well. The searches that were doing well over the last couple of weeks. So this is a trader's market. And even on you guys that are out there for longer term plays, I think that you need to be defensive. You need to either sell covered calls, do a collar on your portfolio, buy a protective put. For those people who are really stubborn about getting out of their long positions, those are some option plays to take advantage of. If you're not into the options or not into shorting the market, I think using contra ETFs is a good way to hedge your portfolio. So today's theme, in regards to what's going on with what the Fed did and how the market reacted, we're going to be looking at what industries are moving fastest. Now, that's still an aggressive play, because when the market moves in a direction, or when the market does correct, 80% of the stocks in the market are going to move with it. But as you can just look at right now, what's the main color? Even though I'm saying we're getting ready for a market correction, what's the main color you see? Yellow. What does yellow mean? Yellow doesn't mean put the brakes on because the market's going to crash right now. That's not what I'm saying. What I'm saying is be prepared, because the signs are there for the market to have a correction. And if you haven't watched the video, take a look at it. It's on our YouTube channel. Mr. Glenn, what sub has real-time data? What subscription has the real-time data? Real-time. The real-time subscription has got the real-time data. Lisa, are you here? If you are here, Lisa, I don't remember what the price is of a monthly real-time subscription. I want to say like $129 or $139 a month. That gives you real time. Now, one of the things I talked about in the mobile app this morning is that if you do have something like end of day, and everybody who's got a subscription to the VectorVest software, to the desktop, has free access to the mobile app, All right. And if you are end of day, you get intraday data on the mobile app, even though you have end of day on the desktop. So just keep that in mind. One of my long-term plays is IEP. I'm going for a ride at this point. So again, Mark, for anybody, in a situation like this where you need to be defensive in your positions, and I want to call it hard-headed. For anybody who's hard-headed about holding stocks long, just buy a protective put on that portfolio, Mark, or hedge. If you want to hedge that in, you could buy a put. If the stock is optionable, I would buy a protective put on it. You won't be going for that much of a ride. All right. Or better yet, you could still be going for the ride, but your price point at that point is just, You're going to be okay. You're protecting. Ouch, it was a Hindenburg attack. What are you talking about? What are you talking about? Motley Fool just sent out a buy signal for Tesla. I'm still in TSLQ. I'm keeping my eyes on it. I still think short term. I don't know if the short term hurt on the margins is over or not. I don't think it's over but we'll see. Anything can happen. I still think long term Tesla is a good play. I still think Tesla is a good play long term. I just think short term with the reduction in price, it's affecting margins, which makes sense. But he says he doesn't care. He just wants to grow sales. All right. Jerry D is like me. I'm still bearish on Tesla as well. And like I said, I still own TSLQ. All right. We got 158 people in the room. Let's see what we can do to get 300 people. And the reason why I always ask to get us to a point is because there's a lot of people out there who still don't even know who we are. We've been around for 30 years. There's still a lot of people out there who don't know who we are and what we do. So that's why I always ask you guys to invite people. A lot of people who subscribe to this channel have a lot of followers. All I ask is that you just send the link out to your followers. Send it out. I'll do the rest. All I want you to do is just get them here. All right. Just get them here. All right. So hello, Glenn. No bacon today. Cook some ribeye instead. Nothing wrong with that. I think on the 14th, Mother's Day, I'm doing a cookout for my wife and all the babies. Doing a cookout for all the babies. So may the 4th be with you today, because tomorrow is Revenge of the 5th. But my new favorite saying right now is, this is the May. Ooh, I like that. From The Mandalorian, this is the May. All right, so I went through all of them. May the 4th be with you. Tomorrow is Revenge of the 5th. But overall, I do like this is the May. All right, so I got all the Star Wars stuff out. Mark says, I did not know who VectorVest was until November 2022. And this is why I say, folks, get some folks in here. Get some folks in here. Sell in May and go away. Jerry D, that is typical of a market cycle. But we're not in a regular market cycle, so I don't know if that holds true. But I still think that we are in for some semblance of a market correction. Darth Tompkins, where's Obi-Wan Joey? He's in the background. Wow, Obi-Wan Joey. Yeah. I first heard of VectorVest around 1997, 1998. But again, there's a lot of people who don't even know who we are. All right, let's get into the software. Let's go and take a look at what's going on. Here is the VectorVest composite. I'm looking at a 1-year graph. I want to get that head and shoulders. And now everybody can see the pattern. I always have a hard time watching the pattern. But Mark, does this look about right for the head and shoulder pattern? Or anybody out there, does this look about right for the head and shoulders pattern? I figured if I could visually really see it, then it would make sense. But something interesting about this. Mark says, thank you for getting it right, head and shoulders. So Todd and I were just talking before I came on. And Todd says, if you look at a 1-year graph, normally a head and shoulders is a reversal pattern. All right, is a reversal pattern. Are we in a reversal pattern looking back the last year? Yes or no? All right, as you answer that question, I'm going to show you something. Do you think we're in a reversal pattern? Yes or no? All right, let's go put a horizontal bar at the high, horizontal bar at the low. That's the market over the last year. Now, Jerry D says very bullish. I don't see it that way. And there we go. Chris, I am with you. Looking at a 1-year graph, looking at support and resistance, we are in a channel. We are in a range. All right. Buttermilk biscuits and sausage gravy. Ooh, I don't like sausage gravy. That's nasty. And I got turned off from sausage gravy while in the Marine Corps. That's horrible. All right. Yes, Mark, this is ideal for iron condors. Ideal where the market just needs to stay in a range, or a stock just needs to stay in a range. This is ideal. But from an iron condor perspective, there's a lot of movement here on the composite. All right, all the way from a low of, let's go get that here, all the way from a low of 49.38 to a high of 59, almost $10. That may not be, something that may not be bad for Condor. All right, that's a $10 move in the VectorVest composite. You're right, it may not be a bad move for an iron condor. SOS military, what? SOS? That was SOS. What was SOS? I'm not an SOS. Did I ever tell you? Talk about SOS. I'll tell you a quick story about being in the Marine Corps. I was on color guard duty towards the latter part of my time in the Corps. And I was assisting the officer of the day. So I was sort of like the sergeant of the guard, even as a lance corporal. And it was my job to get the flag, to put the flag up during colors. So come time for colors, I put the flag up. Everything's good. Salute. Walk away. I'm in my rack because I had been up on duty for 24 hours. And my staff sergeant comes busting into my room and it's like, Tompkins. It's like, yes, Staff Sergeant. He says, are you a flipping idiot? I said, what happened? He said, you do know that you raised colors upside down. Are we in some kind of trouble? I was like, what? Yep, I raised colors upside down. That was bad. And once a base has a flag flying, it cannot be without a flag. So we had to raise another flag while bringing the flag down. So I learned a couple of things. One, don't raise the flag upside down. Two, once a flag is up, you can't just take it down because the base would be without a flag, and that's not good. So, yeah, that's a true life story. I got in some trouble for it. I got office hours for it. I got written up for that. Yes, Glenn E. Tompkins Jr. did raise a flag upside down on the base. Roger says, I flew mine upside down since the last election. I got nothing to do with that. Why not do it in the dark so nobody would see you, Glenn? Because that's not colors. Colors goes up at sunrise, not at sunset. Not at sunset. At least you did have a good night before. I had a good night. All right. So, Glenn, are you playing Apple earnings at the end of today? I'm thinking about it. But because of the market being the way that it is, Mark, I'm really not sure which direction I want to play it. Thus the reason why, if I did play it right now, I'd play an option and I would play a straddle. All right. I think that's the smart way to play Apple right now, is to play it by way of an option using a straddle. Other than that, I'm not ready to touch it. I'm not ready to touch it either way. Not yet. Let it report and then let me go from there. All right, let it report and then let me go from there. All right, so from a market timing perspective, down day to day, let's go put this on a 3-month graph. Down day to day, we broke through a level of support sitting at 55.53. This was an uptrend coming from the level of the low. We broke through that as well. The next level of support is sitting at 53.81. RT is just a falling. And all of the signs are setting up possibly for some semblance of a correction. All right. So there we go. And again, today's theme, we're going to be looking at what industries are moving. We're going to be looking at dividend stocks. I think that's another safe place to be. If a stock is going to go down, I want to make sure that it's got good qualities though. I want to make sure that fundamentally it's good, but I also want to get the ability to make dividends on that. And actually, if it's optionable, I can make money on it 3 ways. I can make money on the price appreciation if it goes up because it's a hot industry. I can make money on selling the covered call, and then I can make money on the dividend. That's why I'm looking at dividend stocks for you today. If it's optionable, you can make money on it 3 ways. And if I can make money out of 2 out of the 3 ways, I'll take that as well. If I can make money on the covered call and the dividend, and maybe not on the price appreciation, I'll take that as well. So we're going to be looking at dividend stocks today, and then we're also going to be looking at Contra ETFs. I think that's the smart place to be. All right, with that being said, let's go take a look at some news that's moving the market. All right, and we're going to start with Powell. All right, we're going to start with Powell. The news came out, 25 basis points. Now, we watched it live. We watched the conference live afterwards. And when I asked the question, is he ready to pause or not? Everybody was listening to the same thing, but some people said he's going to pause. Some people say he's not going to pause. How does that happen? How does that happen? How do we all listen to the same doggone thing, but part of the group comes away with one answer and part of the group comes away with another answer? So right there, as I look at it, we'll see what happens. I think he's still going to be looking at the data to make sure a lot of people are on board with he is going to pause at the next interest rate hike. But what happens with jobs, what happens with CPI and all that, and all those things will make a better determination on what he needs to do. I still think that if he's trying to get to 2% and he's actively trying to get to 2%, then he's probably going to continue to raise interest rates. Now, Dolly says it's the bank pressure. Tomorrow's video, the 6 p.m. video tomorrow, is going to be a bank story. Make sure you tune into it tomorrow, Dolly, at 6 p.m. It's going to be a bank story. And he did bring that up. Now, I am of the mindset that it's not his job to protect those banks. But to a certain extent, it is, because he's got to make sure that they are in line and that they're solvent and that they can do what they need to do, because he is the central bank. I got to think about it that way. He controls all of that. So if the banks, and in this story that I'm going to talk about tomorrow, I'm going to get a lot deeper into it, but there's a lot I've been saying for the longest time, folks, that I'm waiting for the other shoe to fall. It hasn't fallen yet. And if more banks start to fail, he may be at a point where he's got to pause, because the raising of the interest rates affects the lending rate for the banks. If it keeps going higher and they're already having issues, that could be a catastrophe. So I am doing a story on it tomorrow. Dolly, make sure you watch the 6 p.m. video. Why Powell thinks the Fed can tame inflation without a recession. I continue to think that it's possible at this time, or really is different, after the Fed moved the raises for the 10th consecutive time. That's another thing why people think he's got to pause. 10th time. In the beginning, it was super fast, fastest ever, super fast. And now we're just above 5%. Where did he say he wanted to be? He said he wanted a terminal rate of 4. It's now at 5. I think he still can go up to 6. We'll see. Avoiding recession is, in my view, more likely than having a recession. So he's not admitting that we won't have a recession, but he thinks that he can avoid one. Powell's outlook on the way forward for the U.S. economy provided a jolt of optimism after a string of recent economic and financial hiccups that have spooked investors and reignited recession fears. The bank issue is helping to reignite recession fears. I already think that we're in a recession with the absence of a weak job market. The job market is starting to feel some of the effects, but there's still, and he said it, there's more jobs out there than people looking for it. That still shows strength. In a recession, people ain't looking for people. But there's a lot of companies out there, more companies looking for people than people out there looking. All right? People are spending money. The last report that came out on consumer price index, not the consumer price index, but spending, it jumped up 3.7%. People are still, in a real recession, people ain't spending money. All right, so just keeping all that in mind. There is a reason why gold is the only macro asset on the planet now on the verge of breaking out the record levels. I am coming into the fruition that gold is a good place to be. I did pick up another gold position. I'm in SGOL. I now picked up I forgot what I picked up, but I did pick up another gold position. You can't fight the tape. You can't fight the tape. Trade the Bitcoin chart and not the hype. I'm not in Bitcoin still right now. I don't think that the crypto window is over. I still don't think is over. And A Fox says correction is not a recession. I agree with that. And my video was on more so than a correction. Joey put on the thumb a crash. I think it's more of a correction more so than a crash. And I'm with you, Jerry D. I think that we're already in a recession. All right, next story. Fed Powell laid out the future of a modest growth for the U.S. economy, which is what he's trying to do. He's trying to shrink the economy to stop it from growing to effectively go after inflation. But investors are expecting a recession and pushing back. Next story. Now, here's when history says the post-Fed pause rally should start. Now, they're already starting to put out stories. This is Market Watch putting out a story about the Fed pause. All right, so I think that story is definitely building up momentum. John says bullish percent index on gold is at 75%. I wouldn't go long here. Right now, again, I've got a couple of gold stocks because I don't want to not make money on it. All right, next one. Now, this is an interesting story. I did a video talking about the devaluation of the dollar. China takes the yuan global in bid to repel the weaponized dollar. The biggest part of my video that I did in the dollar losing the Federal Reserve currency or the global currency is that all of these BRICS countries, which is Brazil, Russia, India, China, and South Africa, when you look at all of those names, are they stable countries? Yes or no? Type it in the room. Those BRICS countries that I just mentioned, are they stable countries? Yes or no? All right, so I'm going to wait for you to answer that question because there's more to it when it starts to talk about going after the dollar. If you've got 5 countries, and I'm watching the no's come in, if you've got 5 countries that are unstable countries, how in the world do you think that they can come up with a stable alternative to the US dollar? Yes, Mark, you're right. It is a heck of a lot of people. But is it people that help to create a viable alternative currency? Or is it the stability behind the people trying to form an alternative currency? They can have all the commodities they want. And you know something? Whether it's oil, whether it's lithium, I totally understand that. That's good for them. It's tough for us. But even with those commodities, is it enough? Is it enough for them to really usurp the US dollar as the reserve currency? So they can throw tons of money at it. China needs our business. We need China's business. It works both ways. This is why we're a global economy. Every one of us has our hands in everybody else's pockets. That's why we're a global economy. That's a good thing and it's a bad thing. It's a good thing because if China gets pissed off, he can't say, oh, I'm going to take my ball and go someplace else. You can't. But it does tie us all up into one another. All right, so, all right, they hold all the commodities. And fine, that's the second comment about the commodities. That's fine. That's fine. But is it even holding the commodities? Is it enough to garner up what's needed to be looked at as a stable currency? Therein lies my problem. So I think that the value of the dollar is getting beat up because we keep printing so much money, but I do not think that anytime soon we get taken out as the world's reserve currency. Oil prices under pressure on economic fears and gusher Russian supply. As a matter of fact, hold on. Let me go to this one. This one is on the yuan. Let's go start building my watch list. All right, my big new stocks. when it comes down to the yuan or the dollar, I'm going to put in UUP. All right, we're going to start up my list from the big news stories. All right, so I'll start off with UUP. All right, let's get to the next story. The next story talks about oil. And the biggest thing about oil right now, why it's not looking good for us, is because Russia's got a lot of it and he's selling it dirt cheap. It's selling dirt cheap, dirty oil. Everybody else is buying it because they don't want to help us out, or they don't want to succumb to us. And that's fine. That's fine. You know something? We could be energy independent if we just drill our own oil. We got more oil than all those little people over there anyway. Whether it's OPEC, whether it's Russia, we can drill our own oil and don't care what they do with theirs. But that's not the case right now. U.S. banks collapsing, BRICS getting stronger, Ukraine keeps siphoning domestic dollars. And yeah, BRICS is getting stronger, but is it enough? And we can talk about that. And countries are lining up, Dan, to become part of the BRICS. Countries are lining up. And all of the countries that are lining up are unstable as well. And to sit back and say it was because they got all these countries have all of the commodities, that's fine. Not enough. Even with the commodities, not enough to become a stable currency. All right, so oil is under some selling pressure. Let's go put that into my list. I'm going to use up USO. All right. We're going to analyze it. As we keep adding stocks to the list, they're going to automatically be ranked by our VST, UUP, or the dollar is still at the top. RT on it is above 1. Dollar still moving up. Interesting that the dollar is still in an uptrend and gold is moving as well. That is a sort of dichotomy. Go to the next one. Paramount shares drop 30% as streaming costs mount. So it's not getting any cheaper to put content out. All right, I'm talking about Paramount. One of the biggest shows on Paramount is Yellowstone. I just heard that Costner is leaving. It's had its run. All right, it's had its spinoffs too. It's had its run. As we are in a recession or getting into a recession, people are cutting back where they don't need to. Paramount is one of those things that it's happening to. Dan, oil may go up in the summer, but it's going to be short term. All right. But you know something? I'm not even big on how much oil is going to go up over the summer during the travel time. I'm not even big on that. All right. If a recession is really kicking in, there might be a decrease of the amount of people out on the road, Dan. Think about that. It might be. People may be cutting back on vacations and going to see grandma and grandpa. People may be cutting out vacations and not going to Disney World. People may be cutting out vacation and not flying. So I am interested to see what's going on with that. What's the ticker for Paramount? PARA. PARA. Scroll down a little bit, you'll see it. PARA. All right. So let's go put that in my list. Paramount. All right. And let's go see where it sits. And hold on. Woo, excuse me. Look at the move on Paramount, down 25%. Now, the upside on it was there. The earnings was positive, but the earnings growth is negative. It's becoming harder and harder to make money in the streaming field right now. So much competition out there, and it costs a lot of money to put up the content. All right, so there's Paramount. Let's go to the next story. Starbucks looks to China to reopening for sales boost. Remember you said China needs us? We need China as well. So I think a lot of companies that have a footprint in China, and you know something? Wait a minute. How long has China been reopening? All right, I gotta talk about that because this story keeps coming up about China reopening. This is April 28th, so it's a few days ago. How long has China been reopening? Are they open or not? All right. Are they open or not? Do you think we should sell our positions? I have Amazon. No, listen, Fabricio, let me tell you a little story about a guy named Ned. Anyway, couple of things. what are your stops on your stocks? Let your stops hit your stop criteria, number one. Number two, what's the market doing? It's falling down. Number three, what market timing call are you following in the VectorVest software? Follow that as well. The biggest thing is, as I look at all of this, on the home page will help you to determine what you should be doing. What's the main color you see in the color guard? Yellow. Fabricio, nothing about selling your stocks right now. More yellow than anything. This is a time to tighten your stops. So, Fabricio, does that make sense? All right. I don't want to tell you to go out there and just sell all your stocks because that's silly. All right. I don't want you to go out there and just sell all your stocks, but I want you to be defensive in the stocks that you do own. All right. Let's get back into the news. What is the Starbucks? Let's go put Starbucks in my list. SBUX. All right. Let's go see where it sits. As we look at our news, our main news story, number one by way of VST, it overtook the dollar. The upside potential is there, but it's a solid company that tends to meet or exceed earnings, so it makes money. Earnings growth is sitting at 7%. It's got a CI of 1.42. Interesting. And it is overvalued. It is overvalued. Amazon's earnings just collapsed by 50% year over year, and the stock still trades at 115 times earnings with virtually no revenue growth in real terms. You know what that's called? That's called people's perception of the stock, pushing the stock's price higher. That's why it's been so overvalued for so long. It's people's perception. And then people turn around and they sit back and go, what happened to my stock? Well, the stock is grossly overvalued. What did you think was going to happen at some point in time? Thus, the reason why we push you guys to try to be in safe, undervalued stocks. It's a perception thing. It's a name that people know and that people are putting money into. And you're right. It's not there. The growth is not there. All right. Let's go to the next story. Next story is Chile. So I told you guys in the mobile app that Chile plans to net. Chile is the biggest exporter of lithium. I think copper too. I think I did a copper story. I think it's on both. Sending miner shares lower. So they're putting a kink into the whole lithium deal. Lithium is ideally needed for the high demand of EVs. Chile is the one that exports the most of it. And this could be bad for it overall, because if they nationalize it, they can set the price wherever they want and they can screw everybody else. All right. So as I look at that story, let's go put in lithium. I'm going to put in LIT, which is the global X for lithium. Let's go see where it sits as a story in the list. Look at that. It's right in the middle of the list. RT is below 1. It's an ETF, so RV and RS. I got 3 ETFs so far. RV and RS will both be at 1, but the only ETF in here in the list that's got an RT above 1 is the dollar, UUP. All right, let's go to the next story. Another bank, PacWest, tries to calm jittery markets after 60% stock plunge. Again, I think that this is why a bank story needs to be done for tomorrow's 6 p.m. video. Lender says it's been approached by potential investors. Here we go. What next big bank that's too big to fail is going to pick up on some of these banks that are going to be failing? The problem is with that, these banks are already too big to fail. They're going to become bigger as they start to buy more of these flailing banks. Does that scare anybody? Yes or no? That the banks that are too big to fail are going to become bigger. Does that scare anybody in the room? Yes or no? All right, it's going to be very interesting because FRC was picked up by JP Morgan, and PacWest says it's been approached by investors. I need to know what this ticker symbol is on it. PacWest. Western Light. Also, Western Alliance Bancorp also said Wednesday that it had seen no unusual deposit outflows and reaffirmed its guidance deposit. So that was Western Alliance. And then Comerica and Zions were also poised to extend steep weekly losses. More and more banks. All right, I got to find out what PacWest ticker symbol is. There it is, PACW. All right, let's go back to the list. PACW. telling you, folks, the other shoe is going to fall. JPM is neutral, so if it falls, that won't end good. Pac West is pretty much in the middle. Big move. Look at that. Woo-wee. Trading at 371 with a value of 17. It's getting smoked. Negative earnings growth rate. Yeah, that's not good. That's not good. All right, let's go to the next story. Questive. Somebody put in the chat yesterday, and Joey pointed it out, that Aquestive Therapeutics was a stock that beat earnings and that it was a stock that I needed to keep my eyes on. All right, so I looked at the story. It did great. The stock went up a lot. It's up today about 11.3%. Revenue was down 9.3% from quarter one. But income was up. From a loss in quarter one. Profit margin, 73%, up from a net loss in first quarter. So a couple of good things about it. Earnings per share, 14 cents, which is up from 3 cents loss in first quarter. So a lot of good news behind it. All right, and it looks like it's turning around, and it could be a possible something to look at. All right, let's go put that in my list. AQST, and let's go take a look at it. From a VST perspective, where does it sit? Towards the bottom of the list. The stock is grossly overvalued. So it's news driven on the earnings, and a lot of people go, whoa, you got to look at it. It's popping. Fundamentally not sound. RT, news driven, it is up. Look at the earnings growth rate, -5%. So as the stock did beat earnings, and it's up 13% today, as the stock did beat earnings, is it worth it for me to get in? This is a highly, strictly speculative play. Relative value, relative safety, both below 1. The news is driving it higher, giving it momentum. But fundamentally, have a good day, Dan. Negative earnings growth rate. I need to buy into a company, personally, that's got positive earnings growth rate. All right, and the next to last story, Mullen. Mullen, out of gas and out of luck. On April 3rd, I did a video on Mullen where I didn't like it then. And now, practically 1 month after that video, more bad news coming out. The stock is trading below 20 cents. It's probably going to, I don't even know if it's listed now. It's probably still in the pink sheets, and showed no signs of slowing down. The CEO of the startup told investors, while Mullen would use our best efforts to regain compliance, yet it's not on the NASDAQ, for a $1 minimum bid price, things were not looking good. All right, so I had already done a video on it. So in case anybody out there said, oh, you want to talk bad about it now, I already did a video on it a month ago. When it was in the news then, saying that I didn't think it was still a good play, and I still don't think that it is. Let's go put Mullen in the list. M-U-L-N. Where's it sit? Probably towards the bottom. And there it is. Bingo. Right at the bottom. Way overvalued. It's trading at $1.38 with a value of 40 cents. Fundamentally not sound. They've got positive earnings growth rate. They've got an earnings, though. They've got an earnings of $1.36. Wait. They got an earnings of negative. All right, no. Yeah, negative $3.18, but they still grow at a 15%. Sorry, I did not hear your comment because the internet is not good. Our internet should be good. Anyway, which comment on Mullen? Mullen, the whole idea about Mullen is that I did a video on the YouTube channel on April 3rd where I wasn't confident about it then when it made the news, and I'm still not confident with it now, as it's down today 13%. All right, and the last news story is on FDA approves RSV vaccine, the first RSV vaccine. The beneficiary of that is GlaxoSmithKline. All right. Mark says, in this market, if you're not making money, you are toast because people can have risk-free money with 5% in T-bills. Listen, that'll be another thing that will pull money out of the market is if people can put money into the bank and save it at a higher interest rate. That's why the market is so overbought. One of the reasons is because money goes where money grows. Money's not growing in the bank, or it's probably getting close to that point where people are going to start taking money out of the market because they think it's riskier and start putting it into lower yield savings. We'll see what happens with that. But if people are getting laid off in droves, what savings do they have? That'll be another reason that will pull money out of the market. A lot of layoffs, a lot of people without jobs. If they don't have jobs, how are they going to invest in the stock market? All right, so IMGN is overvalued and relative value is on the ground, and that's not good. So again, I love that how Jerry uses the VectorVest software to be able to make better decisions. And that's what I want all of you to do. GlaxoSmithKline is going to be the beneficiary of the RSV drug. And look at that, right at the top of the list. So out of all of the big news stories, Mullen, big news, down to the downside. Paramount, look at this. A lot of these stocks are moving totally in the wrong direction. Let's graph all of these really quick. So fundamentally, we've looked at all of these. Let's go put these on a 3-month graph. GlaxoSmithKline, I think the 3 and the 8 just crossed a little bit of a shooting star pattern with follow through today, breaking through a level of support. I think the news might be enough to push it up, especially or when they can start selling it. They got the FDA approval. This is going to be a good drug in their pipeline in order to start making some money. The next stock in here is Starbucks. Man, this is them waiting for China to open up. Was this an earnings play? Yes, it was. I don't think the earnings was so good, and that's probably why they're making a push to try to get more sales in China. Why? Because China's got a lot of people. They got a lot of people that drink a lot of coffee. UUP, the dollar on a 3-month graph, and this is why gold is doing halfway decent. The dollar is milling along, and the dollar is usually, gold is usually a safety net for when the dollar starts to go down. Here, wasn't a good time to buy gold. Here, as it started moving down, gold started picking up, and right now, it's just leveling out. Let's go, and that was because of the yuan story why we have gold in there. Another bank, earnings, another bank falling hard. Solid level of support sitting at 860, fell down, hitting a new low today. Be careful with the banks. Lithium, with the story with Chile going to do their thing with lithium, pretty much socialize it or buy it up. I'm not. The demand for the lithium is there. It's just a tough play right now. And if the demand is there going to be a supply issue? That's going to be a problem. If there's going to be if Chile is going to create a supply problem. Here's oil just getting beaten up, straight up getting beaten up. Russia's got a lot of it, and everybody who doesn't like us is buying it from Russia. Russia's giving it to them dirt cheap as well. They're not trying to make no money. They just want to make some money so that they can support the war effort. All right, that's all I got to say about that. Aquesta, beat earnings. The equity curve looks good, but do you want to stay in it long term? There's the earnings play. Do you want to stay in it? Fundamentally, it's not sound. Let me bring this over. Fundamentally, just not there. Not there. So, do you take it based on the news? Sure. It's a short-term play. It's a short-term play, and you take it. Don't be afraid to take some off the table, like on a day like today when it moves up this big. Yep, our gas in the East Coast is $3.14 at the $3.14 at the low. I don't even know what our gas prices are. I just go fill up my vehicle. Paramount earnings, big fall. Paramount earnings, big fall. So, being able to put out the content is costing. And not only that, people are probably backing out of their streaming. Mullen and it split. When did it split? It split today, 1 for 25. They're doing everything that they can. For every one, you're getting 25 shares. They're doing whatever they can to push this stock's price up. I don't know if it's enough. All right. So those are all of my stocks from the news. We built the watch list on the fly as we can watch as these stocks populate where they sit. All right. Next thing, let's go to the hottest industries. I've got stocks from the hottest industries. I've found 3 industries that were on the rise. Now, before I start to talk about what the industries are, I want you to be aware if the market's going to have some more downside, be careful even with the hottest industries. Does that make sense? Yes or no? Even though these are the hottest industries, market direction, is going to dictate where about 80% of the stocks are going to go. So if the market is in for a correction, a pullback, whatever you want to call it, these stocks, even though they're in the hottest industries, just be very careful with them and understand, as I stated earlier, this is a trader's market. This is not a trending market. All right. So let's go take a look at the 3 industries that I found them in. ETF short, that makes sense. All right, that makes sense. And I like that. These are actually Contras. These are Contras. I like that. Food is another one that's moving. Celsius and Coca-Cola Euro, and building, Eagle Material and CRH. Those are the only 3 industries that I found that are on the rise right now. So if I'm looking for something, let's go put some 3-month graph. If I'm looking for something, I think that this is a great play. BNKD is a great play, especially knowing or anticipating that more banks are going to have issues. I think that this is a solid play. Followed by Cold, which is looking at the bearish side of natural gas. In our Jockey Club, we're making money on this. In the Jockey Club, we're making good money on this. I think that we did a good job when we pulled the trigger. Looking at Celsius in the food industry, the 3 and the 8 are solid. Watch the wicks at the top of these candles. All right, next one is, wow, EXP. This is building expertise. Look at that. Look at the rise in the volume on that. I'd keep my eye on that. I would definitely keep my eye on that. Rising industry, CCEP. Look at that. Good, goodly. It looks a lot like ELF. Glenn, I can't comment on shorting aggressively with the buy to sell ratio. I'm not shorting anything, John. You're not seeing me. None of these are shorts. The only thing that I am considering, though, is contra ETFs. And because the buy to sell ratio is at that level, remember I said in the video about the market correction that those levels can stay there for weeks at a time. Remember, it's giving you a heads up that the market is looking for a bottom. It's not until the market shows you signs of bottoming that we've bottomed. Does that make sense, John? So I hear you. I still think that the market has some downside, and I think that the buy to sell ratio can stay low for an extended amount of time in the current market's condition. All right. So we'll look at it from that perspective. And then the last stock is CRH. It's in that cement, but a lot more volatile. I'm not sure I like that, but I picked it because it was in a space that was on the rise. This stock doesn't look so pretty, though. If I've got to look at the building part of it, then I'm probably looking at EXP. All right. I remembered in 2008, it stayed low for what seemed like forever, and it did. It did. So you got the heads up that the market is oversold and looking for a possible bottom. The thing is that it's looking for a bottom, not that the bottom is here. All right. So those are my hottest industry stocks for you. I don't know if I want to look at swing trades. I do want to look at dividend stocks for you. All right. In a situation like this, like I said, let me see. All of these have options. I've only got 4. All of these have options. So on these stocks, you can actually make money on these 3 ways. Price appreciation, like UGP, is up nicely today. Even if I bought a protective put, it's not making me any money today, but there is protection. And then I could look at this stock does pay a dividend. All right. Now, when I look at these graphs, let me show you why I like these from a dividend perspective. I'm going to put this on a 6-month graph, and I'm going to change the layout to reflect one that I've got for dividend analysis. All right, the stock is above the 20-day. Look at the rise in earnings per share. The dividend might have dropped, but it's still at 11 cents. And look at the dividend safety. The dividend safety is sitting at 49. I like that. All right, and pretty much from the bottom left to the top right, a little bit of volatility, but from a dividend perspective, I like it. Same thing with ABAV. Look at the earnings per share pop. Look at the dividend. It fell a little bit, but look at the dividend safety. It's sitting at 50. It's a safe dividend. Let's go to the next one. QSR down for 2 days, but look at the stair-step effect on earnings. Look at the pop on dividends and look at the dividend safety, which is sitting at 51. Overall, bottom left, top right with a little bit of volatility involved. Remember, these are strictly for dividend plays. This is utility. The earnings per share has fallen, but it's still at 29. A pop in the dividend, and the dividend safety is sitting at 39. Not as safe as I would like, but relative, not as safe as I would like. All right, so there's my dividend plays for you. Gold is on the rise. Let's go take a look at gold stocks. I got a list of gold stocks. Where did I picked up on GFI. That's what I picked up. I knew I'd see it. Once I saw it, I'd get it. Look at all the gold stocks that I have in here. They're all making money. They're all making money. Put all of these on a 3-month graph, and let's change the layout to my my more aggressive. Where is it? Trade. Now I'm looking at the 3 and the 8 and RT and volume. Whew. Gold is on the rise. Now, I would still be careful. Some of these stocks are getting to be parabolic. There's Harmony, there's KGC, right off a level of support, bounced, and the 3.8 like that. Watch the wick on today's candle. IM Gold, look at that big wick though. Wick on EMX. What's my name? Oh, that's DMX. FSM retracing right from resistance, but look at the wick. Closed candle on ASM, big wick on AG. Closed candle. All right, so even though the gold stocks were on the move, I'm just telling you guys, be careful, be careful, be careful. William is in GFI on options. Dividend payer in as hot as you can get. IEP. Okay, I got you. All right, IAG as well. So gold stocks are on the rise, but I am, by looking at that graph, just be careful with them. All right. I'm at 252, so I'm probably not going to do your stocks today. It's all right. I think we covered a lot of material today. I've given you some ideas of what to look for, given you some of the stocks in the hottest industries. We talked about some Contra ETFs. We didn't talk about Contra ETFs. That's the last thing. Let's go to Contras. That's the last thing. I got some Contras for you. Okay, there we go. There's 11. What's moving up the most? All right, people are getting out of the riskier stocks. Small cap, high beta, semiconductor. Look at this. Tech stocks, SQQQ. Ravi's not here, so DRV, not a good play right now. But if I'm looking at some Contras, here's some good, and they're all optionable. Chris, don't like the VIX today. I don't either. The VIX is showing that there's more fear in the market right now. After the Fed did what he did and said what he did, there's a lot more fear in the market. All right. Now, with that being said, we covered a lot of stuff. If you're brand new to the channel, don't forget to hit the subscribe button. If you like the content and the commentary today, don't forget to hit the like button. Hit the like button. Especially, like I said, the like button only tells me that it was worth it for you to stay here today. All right. And that's all we want. We want to do the work so that you reap the rewards, but it's important, hopefully, that you guys get to invite people to these live streams so that we can get newer eyeballs seeing what VectorVest does. A lot of people, like I said, still don't even know who we are. After 30 years of being around, I find that kind of strange. But it's got to be word of mouth. You guys are my mouthpiece to get people to know who we are. As I said earlier, may the 4th be with you. Tomorrow is going to be Revenge of the 5th. But my new good saying is, this is the May. Thank you guys for supporting the VectorVest channel. And we'll be here next week, next Thursday. We'll have new topics in line. All right. And don't forget to look at tomorrow's video. One last thing before I do go, we have a Los Angeles 2-day seminar. Boston, put the link in the room for me, please. We've got a Los Angeles live seminar. May 19th and 20th, so it's coming up quick. If you want an opportunity to meet us live, it is not streaming, so it's only live. And you get an opportunity to talk to us face to face, pick our brains, all that kind of stuff, but you got to be there in person. Lisa's going to put the link up in there. It is the Los Angeles 2-day seminar, May 19th and 20th. We provide lunch. You get to hang out with us. Thank you, Boston. You get to hang out with us and all that kind of stuff. So with all of that stuff being said, again, thank you for being here. Adios, arrivederci, ciao, au revoir, sayonara. Aloha to all my peeps in Hawaii. Bom dia. Salam, shalom, namaste, yasu. Until next time, folks. See ya.